It's 12 o'clock. Welcome to Taking Stock. What's the date today? It's the 8th of the 11th, 2023. John's still not here, and hopefully he's not getting caught up in more floods, because the weather's dreadful here. In fact, my wife's just coming back from Turkey, and the sun was glorious there. Hope you're well, everyone. It's a soggy market, soggy everywhere. By all means, if you haven't watched this before, hit that like button if you do like it. Subscribe to know when we're doing special one-offs, maybe. And today, I'm talking about deflation. I've heard a lot about this, money supply. And I said yesterday, I promised you, I teased you, money supply chart. I'll show you this here, okay, on the share screen. I don't know if you can see this, but it's on the on Vox Markets later. You can see this. This is the money supply, right? And it's in black, and inflation's in red. Okay. Now the money supply contraction is the fastest it's ever been since 1930. And so, what is deflation? It's when prices of goods go down, of course, and that's quite worrying for the economy. And I think the bank leaders are going to be worrying about this in the next few months, and that's why they're going to raise interest rates along with the economy sort of cratering. And money supply is a total amount of cash and equivalents in the system. And how do they change this? Basically by buying bonds, for example, selling bonds, the Bank of England, because of course that sucks money into that, and also raising interest rates. And then you get less money in the system, less people spending. Monetarists who view money supply as the main driver of demand in the economy believe that increasing the money supply leads to inflation. And of course, conversely, decreasing the money supply leads to deflation, which is worrying. So have the banks over-tightened? Have they done it too fast? Because remember, the economies are like super tankers. They take ages to get going. And in fact, a while back, what somebody from the MPC committee said that only about 20 to 25% of the interest rates, the effects of that, are in the system right now. And we can already see things are slowing down massively. You got PMIs coming down, unemployment going up, growth is really slowing, and yet only a quarter so far of the effects of interest rates have been felt. So I think they're going to have to put that big super tanker in reverse massively. And in fact, going down here, Bank of England Bailey's talking today. He said, it's too early to talk about interest rate cuts. He's going to say that, isn't he? They're saying higher for longer, higher for longer, higher for longer. They won't, honestly. Bailey said he's optimistic that inflation will come back at the 2% target within 2 years, but that rates will likely need to stay high for longer to make that happen. However, on Monday, Hugh Pill, good name that, Mr. Pill, said financial markets' expectations of a rate cut in 2024 doesn't seem totally unreasonable, at least to me. So it's going to happen. We're not far off here, where they are going to be reducing interest rates. And of course, we may have a bit of a turbulent market in between, but I think we're going to see gangbusters. In fact, look at this. Savills, they say the housing price of the drop has peaked pretty much. They may drop a little bit more, but they expect the Bank of England to start cutting rates in the second half of 2024 and reducing its base rate to 4.75% by the end of the year. So 4.75% at the end of 2024. And they reckon rates will fall to 1.75% in 2027. How do they know that? Have they got a crystal ball? How do they know? We know economists are way off. We sort of read figures every day on forecasts of figures, and they're always off. How can Savills look into 3 years down the line and say there'll be 1.75%? But anyway, they are going that direction, I believe. What's your thoughts? What do you reckon? When do you reckon the central banks, when do you reckon, right, they will start reducing rates? What's your thoughts? Do you think it'll be earlier than the first half or second half of 2024? Because that's when the markets will start to rally. Regardless of the economy and the markets, two different things. When will they start to reduce interest rates? And let me know. Please comment there. Let me know. What's your thoughts? There? Risisov says disinflation maybe in the short term, but the only function of economic forecasting is to make astrology look respectable. Yes, John Kenneth Galbraith said that. It's true. Absolutely true. Forecasting, like I said, they pretend they know what they're talking about. They pretend they know where the economy's going. They don't. I wouldn't be surprised if we have, after Christmas spend, which apparently 2/3 of people are going to spend less anyway, there's going to be a major tightening of the belts across the economies, and it'll head downwards. Let me know, H1 or H2 of 2024, when will the central banks reduce interest rates? Because they say higher for longer. They lie. They lie. They pretend, and they adjust the narrative to fit what they've been saying. You know, oh, data driven, higher for longer. On the phone to the Fed, do you remember? Yes, higher for longer. We'll keep saying that, shall we? Yeah, okay. Until they're not higher for longer. Yeah, okay, cool. Thanks, Jerome. Okay, let's look at the front page of Vox Markets here. Let's put my screen there. CleanTech Lithium, bit of content there. Lithium, in fact, very interesting. I was talking to Neil today. Neil Herbert, it's Neil now, it's first name terms. But Atlantic Lithium, they've expanded the drilling increase by 43%. And it's interesting where the lithium market's going at the moment. The prices are dropping in lithium, but they are, a low-cost producer. And the problem is, you see, when the price isn't high enough, a lot of programs where, say, the all-in sustaining cost is around about $1,000, will just get put on hold. But you've got this looming deficit coming on the line for lithium. And so you can't just switch a mine on. It takes about 10 years. And they're nearly there, pretty much in mining terms, like what, first quarter of 2025, they'll be mining lithium. And same with CleanTech Lithium, the direct lithium extraction. And they've had meetings with, they've got China, and it's all going well there. So it's very interesting. They didn't use evaporation ponds, it's direct lithium. And they said this DLE pilot plant designed to produce a ton per month of lithium carbonate equivalent. And they said they're very excited about that. It's heading in the right direction. And they do believe that's the future of lithium, direct lithium. And there's Aldo Boitano, the chief executive officer, says, it is clear in my mind that DLE is the way forward for lithium production if we are to meet EV production targets. So very interesting. Two lithium plays. Got to say, there's a rising tide there, isn't it, with lithium? So you've got CleanTech Lithium and Atlantic Lithium. Let's have a look at the charts of both of them. The chart. In fact, let's quickly let's look at the Marks and Spencer. Marks up 10% a day. And they've said that let's have a look at what they're saying here. MKS doing very well, isn't it? Their food shop in half-year report. This is, and they're saying profit before tax adjusted items 360 million, up on 205 million. That's good. Statutory profit before tax 325, and food sales up 15% pretty much. Clothes and home sales up 5.7. They're back in there. Ocado retail share of adjusted loss 23 million. Okay, but it's looking good. This is strategy to reshape M&S is delivering. Let's do it matching there. In fact, let's have a look at the. So that's one of the biggest rises there. Rolls-Royce second, Entain, Unite. So they're all up. A smidge, a tiny smidge, not a lot. All the indices up there. Fallers, Hargreaves Lansdowne. Wow, there we are. I do think it's going to roar back. Centrica, RS Group. So let's look at the Marks Spencer charts. I think it's looking quite good, isn't it? MKS. If you want to comment on anything, please do. Just comment there. Any companies you want me to cover, if they're not on the front page there, let me know. But look at them. Look at Marks. I know people bang on, right? So I do say about this all the time. Just avoid a downtrend if you can. That's all you need to do if you do the fundamental research. And look at that. That's an example of that. And if you go back, horrible downtrend for a long time. The nice little rally, big rally up here, comes back, of course. But you can see pretty much these are the 200-day moving average, 50-day moving average. So it tries to break the 50 here a couple of times, rolls over, breaks 200, and of course, new highs up here. Because if you look across, these are what I'm talking about, is previous highs, pretty much at like. You can see a little bit of congestion there in that area. Dipped around below, broke back up at 165. What are they now? They are 250 a share and gapped up on the day. MKS, Max and Sparks, they're back in fashion, aren't they? Do any of you shop at Marks Spencer's? Have you bought any pants? Because I know a lot of people for a long time. It was largely, when they were getting the clothes thing wrong, it was largely, I know this from not me myself, but their food was always good, and their underwear, food underwear. You just go in there in your underwear, buy some food. So let me know. Do you buy any Marks and Sparks stuff? That's good there. Let's look at the charts of CTL, CleanTech Lithium. There. Oof. That's largely due to the lithium price. And I said, I mean, another example. That's look at that. IPO'd at what? At 34, bit below IPO price, pretty much. That's CTL. What's the market cap of that, gentlemen? Let's have a look. CleanTech Lithium, 29 million. Is that all? Is that all? I know I'm not into mining and all that stuff, but I'm in. There's been a lot of resource stocks being hammered, absolutely hammered, largely because of China and lithium, all that, the price of commodities going down, of course. But there will be opportunities there. When resource stocks start to move, they really start to move. So that's interesting. It's taking a bit of a hammer in there. Sorry, let me just bring this across a bit. This is Atlantic Lithium share price, but they've increased their resource drilling by 43%, 8,000 meters. And like I said, they are a low-cost producer, and so they're not too worried about the lithium price coming down, because for them, it's better. It's less competition. Many operators can't operate at their level of cost. So, so when that deficit grows, well, it's still. I mean, I think they're all-in sustaining costs around about $400. So it doesn't bother them too much. But again, they've done a lot of work, a lot of progress. But that's the trouble with resource plays. It is they are leveraged to the commodity they mine or they produce, and so that's the problem. So once the commodity starts rallying, that's when if lithium starts to rally, keep an eye on those two stocks, okay? And they will start to rally, but keep an eye on those two stocks. And lithium can go crazy. It's quite a liquid market. It can really roar. So it's worth looking at that. Okay. Any comments? Here we go. Looking at the queue this morning at Greg's, I don't think anyone will be capable of tightening their belts at the moment. Hey, super mono. Yeah, I was tempted this morning. I had a shootout. I took my son to school. Why in the rain is traffic worse? It's just everywhere. Normally driving to school 10 minutes took me 25 minutes, and then I go to the post office. And this guy came out of the co-op. It was part of the post office, and large fella, quite a big unit. But he had with him a bag of freshly baked stuff. He walked past me, and he wafted in my nose. Oh, I fancy some of that. I didn't go for it though. Some fucking steak bakes at sort of about 8 o'clock in the morning or 8:45 in the morning. Longer term, inflationary trends include deglobalization and underinvested in extractive industries. Also, young people don't want to go into mining or oil and gas. You're right there. I don't particularly, I prefer tech. When it comes down to it, I mean, do you have favourites areas you really like to invest in? Because I prefer, British technology. That's what I like. That's Dagger88 says the fund managers will have to stop sitting on all that cash sometime. The Bank of England may start to guarantee large investments. What about Destiny? Still motoring along to infinity and beyond? Yeah, in fact, looking at the front page there, I don't like to talk my money. In fact, I got one riser, one fall today, and I just think ridiculous. And this is why you should look at momentum a lot, because when someone sells, Silver Bullet has been sold off today. It's not a lot of volume. It's about 11 grand's worth. But it trickled in at the start because it's very liquid. It dipped down and someone else has joined. Oh, it's going down, I'll sell. That's the mentality of of the average private investor. Oh, it's in red. It's down 5%. I'll sell. Why are you selling? Oh, someone else is selling, so I'll sell as well. I don't know why. What about the business? Anyway, most followed. Destiny, it is motoring away. When you get momentum like this, it doesn't stop. But listen, I just think if you look back at the chart there, and like I said, the forecasts on this are massive anyway. They're like at £3, £4, something like that. So, and yet if we go back just to here, it was 180 a share. In fact, it peaked up to 250 a share, and that was they weren't anywhere near as advanced as they are now with their program and their pipeline. And they didn't have the management they had then. So, that's a typical bull market. I don't see this as any surprise. I think it can keep going. And when it keeps going, like I said, a rising price attracts buyers, a falling price attracts sellers. It depends which way you sit. You think, oh, it's a bargain. Get in there. I tend to look at the chart. So, yeah, but I don't see any surprise in that. I think it'll keep going. It'll keep trickling up. And one day it'll have a sort of A 60% rise. No, I'm joking. I'm ramping there. No, one day it'll have a big rise, but I don't want big rises. I want small rises because people tend to sell into big rises. But yeah, it's doing very well, DEST Pharma. But I still think two, late stage going to phase 3 assets. I think it's still undervalued. There's a pipeline of drugs, and like I said, the one drug is worth 2 billion peak sales. The other one is worth $500 million, and you've got the pipeline there which can add to that. So even if you do 10% of that, 5% of that, it's still what, 300 million market cap or something like that. So So I still think it's undervalued there. What else is there? Yeah, so just look at the fallers. One of the big fallers is Silver Bullet. I think, what are you doing? It's 11 million market cap. They do 11 million round about that in revenue. One-time sales. They're going to be profitable next year, and it's in the biggest growing market in the world. They've got a 4D AI product. I'm talking about my own stocks. I do apologize, but I mean, people are just selling because people are selling. It's just silly, really. I mean, look at that. It's only 11,000 shares traded, which is less than 10 grand, but it's not a lot. But my forecast on this for 2026 is around about what is it? Share price about £4.55, so 580% up. That's what I think we'll get to. Going to be profitable next year. Very scalable. Digital product, AI digital product in advertising. So I just think it's silly, really. People just sell that. And that's why momentum is very important, because you just get like I said, rising prices attract buyers. Let's look at Naked Wines. We talked about that yesterday. Second most followed. It's been hammered. But, when you're investing, like I said, do you like certain sectors? I do. I like technology and all that stuff, or biotech. And I like those areas. And when you look at companies, you get carried away a little bit and think, in fact, do I like that sector? Because Naked Wines is selling wines online, like we said. And it's not really. I mean, the revenue is big, but the margins are very slim, Anyway, people are sort of following that. ECR. Marks is third. Marks and Spencer, nice that. What else? Versarien, placing to raise 450 grand. This is going desperate now, this turnaround strategy. What's the market cap here? They've raised half their market cap at a discount. But they keep saying about turnaround strategy. Is it going to turn around? Because they've been raising now. How often they're raising here? Raising November. Turnaround strategy. Raising in July. Did they raise somewhere else? I'm sure they raised somewhere else. But the amount they can raise as your market cap goes down becomes smaller and smaller, unless they get some kind of, cash generation, which I think is quite a way off. It's a little bit worrying, And who's chucking money into that? Well, I hope it goes well with people, but it's worrying a little bit. In fact, that was one of the companies that did really well in back in the day. Look at the chart on that, the hype cycle, and I got in around about 13 pence, I think it was. Was it a 13 pence? Or no? Oh, it's a 10 bag. I did take some off the table, but it did 10 bag. Yeah, like I said, the hope hype cycle. Right? Pay attention to that. Now, I'll say this: if you're in a company that has got very hypey pre-revenue, okay, it's got hope hype potential attached to it, and you're in a bull market pretty much, it's got to be sub 20 million, sub 10 million probably, to do that. If you're in a hope hype potential stock pre-revenue and its market cap is like over 100 million, it's gone, it's done it. The rise has happened. It can go further, but generally I'm speaking. But they've got to be small, they've got something special, and they've got to have scale. And sometimes, they may not have scale, but you get momentum, hype building in, buyers attract buyers, and that's what happens. But then comes the commercialization. When they start generating some revenue, it starts coming back down because they realize the valuation up here isn't justified by the revenue that they're producing, and so it has to readjust. It's overshot its valuation. But that happened with Bidstack as well. It did 6 or 7 bags on the hype. But then you realize when they come up with revenue, it's like 30 grand. What? The market cap is 80 million. That doesn't make any sense. And so, sooner or later, once a company starts commercializing or generating revenue, that's when a value justification comes into play. Before that, pre-revenue, it doesn't have to. It's all about what can be, and dreams are bigger than reality. And that's why hope high potential stocks can rally very strongly, but you got to make sure you're out at the right time. Some of them will never get to commercialization, by the way. They'll just flounder. And I think... okay. Fredo 300. LOL. With recent streams, I'm looking at reducing the number of holdings, but every day I watch you and I want to buy more. Yeah. Do you know what I do? What I've done, and I literally, I've been, evolving a strategy for years and years. You've got to evolve the strategy, but my strategy was very, very good in the bull market. It did very, very well, and then the bear market hit, and I realized my strategy wasn't insulated against the bear market. So I've adjusted it, and now I've got a strategy that I think is almost bulletproof. In fact, I know it's bulletproof. The only problem is you have to have discipline to stick to it. But what I would say is I see a low-cost diversified fund as the backbone to any private investor's portfolio. And depending on how experienced you are and and how risk tolerant you are, that depends on what percentage it takes up on your portfolio. If you're experienced, and I mean averaging it on a monthly basis as well, low cost, a good performing, well diversified fund, and then you can then have your high risk reward stocks. But if that doesn't play out, it doesn't matter. By the time you get retirement, then you have a safety net of that fund. But if one or two or three, even one or two, proper play out on those high risk reward plays, and I'm talking about reducing, the chances of them not being a success by doing several levels of, using quality filters along the way, then that will be a feeder fund, a feeder fund for your fund, for your diversified fund, and so that's the way it should play it. And like I said, you can only need really one of those. And that's why, talking to Paul like this, I said several strategies. When I look at growth stuff on my spreadsheet, I look at growth. Most important thing of all, growth. If you look at small cap companies, growth. They've got to have growth. If they don't have growth, don't even look at them. The company may use excuses, but if they got a unique product, it'll grow. Top line will grow. You also got to look at valuation. Two most important things. If it's overvalued, you missed the rally pretty much. So there aren't that many companies out there where have good growth and they're good value. Sometimes they may be good value because there may be a worry about some funding going on. But if they're good growth, they're good business, they'll get funding. I genuinely believe that. And then you look at health, efficiency, potential, which are forecasts, and momentum chart. But so if you could put those filters in, and then you also have a fund, then you're covering off a lot of bases risk-wise, because you want to look at risk first. Risk is the most important thing. Most important thing. If you remove the risk, there's only reward. Most people don't look at the risk first; they look at the reward, and then when the risk comes in, they go, "Oh, I didn't think about that." Oh! Okay. Apparently, there's a big article on Boom Bar in the Guardian. They covered it in the headlines last night. And one of the last stories in the paper review. Okay, was it good, Ian? That was from Ian. Sorry, I'm getting carried away there. Sometimes I get enthusiastic about things and I get carried away. Okay, so eEnergy. I did own these a while back. I got a bit worried when they started taking on a bit of debt. But I did like the management. Harvey and that was, good workers, and maybe I got jumped up too early. But I did start to invest in a downtrend. That was the problem. Everything else was in place. I think the growth was there, the value was good. They did need funding, and that's the problem. And if you look at the chart here, but anyway, Lustico, whatever they're called, PLC, has invested in them at a premium, 5 pence per share. There was 4 pence when this came out, and not only that, they're talking about selling this energy management division for around about 30 million. They're saying nothing's happening. No guarantee, but they will lead to a transaction. And I'll show you the chart where I invested in these, and I was wrong. And this is part of the strategy. I invested when we started going to a bear market, and the growth was there, the value was there, but the momentum wasn't. Look at that. So it came from here, did very well, and I nearly invested in the start here. And so I think I started invested. What is it? Right here. Then in the end, I just bottled it and cut and run. And that's why learning from downtrends is very important. There be many things in place, and then all of a sudden, growth can be there, the value can be there, but if momentum isn't, there can be a big seller in there, and it can wipe you out. So you just got to wait. Like I said, you could see there pretty much. Look at that. So 50-day moving average broke that a couple of times. It needs to break previous highs if it does that. Okay, that's quite an early indicator, but that's a downward sloping 50-day moving average. It's not bottoming out, is it? Here it is. So it needs to get back above these previous highs. Didn't do that. Went back down. Okay. Then it broke out previous highs. You could say, This is the previous highs. Now, these are probably previous highs, about 4 pence. It broke that nicely, and it's gone sideways. Like I said, it's gone up and down, a bit of a sort of thing. So it's now at 5 thing. But you can see there's a massive downtrend, which I ignored. I fell in love with the story. I fell in love with the growth and the valuation and the potential, and I didn't look at the momentum. One key issue. So anyone who says charts don't work, rubbish. You don't know what you're talking about. And they do. Absolutely. I know they keep going on about this, but it's boring because I know they do. And there are some very good traders who just make a living off charts. So, and they don't look at fundamentals. In fact, look at forex traders. They make a living off charts. So it's they do. It does work. I wouldn't do that though, because you've got to be very disciplined in that stuff. So that's eEnergy, second most read. i3 Energy, Q3 operational financial update. They do see average Q3 2023 production of 21,000 barrels, up 3% on Q2. Net operating income was up 25.9 or $26 million, committed 17. So it's all going in the right direction there. As part of i3's commitment to its total shareholder return, dividends of $3 million were declared for Q3 and paid in October. They've approved a $6 million capital program for the balance. So there we are. I did do quite well in i3 back in the day when I was less fussy over sort of sectors and stuff. And what's it looking at now? Oh, look at that. That's interesting. Very interesting. So you see, it's bounced off this level here. But again, you can say, oh, I'll buy at the lows, but it can go lower. That's the trouble, So you're better off waiting, say, if you see there in the last, since June, it hasn't gone above that, 15 pence level. And in fact, if it can bounce off that and start rising up now, it'll be a good sign. But that's, like I said, that's a bit of a downtrend there. And conversely, nice uptrend. But look at I've obviously pre-marked this before, but you see there a series of lower highs there going down, lower lows. There we are. So that's i3. And here's Harland Wolff again. I'm not going to look at conversion of bonds and share issuance. How boring is that? MOU, new aluminium vessel build. Ooh, they're pumping out a lot of news, aren't they? Harland Wolff. They're pleased to announce this. I got to laugh at that when you read any RNS. I think sometimes there's copy and paste the broad text, not Harland Wolff, but because you get some companies saying, we're pleased to announce a fundraising. And it's like 60% discount, and they've raised nothing. And you think, why are you pleased to announce that? I think they just copy and paste it. Anyway, an MOU with all still ships for technology transfer skills and shipyard capabilities required to build the next generation of aluminium vessels. Okay, Oslo is an Australian global shipbuilding company and defense. Okay, all right. So they in partnership with those. Okay, all right. Apple Door. The company selected is Apple Door facility. How is the chart? It's still not. It's even the amount of news they put out recently. It's still not for rallying, is it? A lot. I wonder why that is. You see, look at that. Let me take the 50-day moving average off because it's a bit messy. Yeah, but it's downward channel here. I did break it here, but then it's gone sort of it isn't really making new highs, is it? So it's picking up. Maybe there's a seller in there. I don't know what's happening, but it needs to bottom out a little bit. But yeah, it's not a good looking chart there. Wow. Okay. Quick few comments. Okay. A lot of small caps don't have commercialization side to the business, but this allows for a JV with a big company. Okay. Nation, any thoughts on FDEV? Seems to be recovering well. Frontier developments. I did look. Do you know what? I had a chart alert on those the other day. I'm sure I did. Let's look. FDEV. Frontier developments. 108. Frontier's development strengths are immersive and fun gameplay design, unparalleled artistic quality, all underpinned and enabled by cutting-edge house technology. So it's what they announced recently: holdings. Financial results. 104. They've been a loss there. It's been hard for gamers and all that stuff. Revenue. I'm going to look at the chart. I'm sure I did get an alert on this, and I'll check now. Recently, let's see. We'll soon see. if the 50-day moving average has been hit, I would have got an alert. Yes, there we are. So I've got an alert. So you can say, do you know what? It's looking like maybe the start of a bottoming process here. You see, a high low, maybe too early. It happened here though. It's a trouble, and then didn't get to a day moving average. Then it came down, and what's the so let's scroll down a second. The results. Oh, hang on, look at that. So 114, 104 versus 114 this year. They had a loss of 26 million. How much cash there? Let me see how much cash they got. So they got 28 million of cash there, pretty much. Total current liabilities there. Let's look at total net assets, 95. Okay, 95 million. Okay, let's look at the cash flow statement. Actual cash coming in and out. Net cash from operating activities. Where have they got that from then? Depreciation, amortization, 41 million. Okay. Never mind. So they got the net cash change the year, 10 million pretty much down. Cash equivalents of at the end of the year, 28 million. Okay. So they're going to be making let's look at the forecast on that. But maybe they aren't, but I haven't read the fundamentals, what they've said. With that, but I do sort of see that as maybe a bottoming process there, maybe. But like I said, you can't confirm it yet because it's done that before. It's it's come down there and touched the 50-day moving average, went up and down the range, and then a gap there, and then went down again a further thing. So I wouldn't say that's it's very early stage. You can't tell yet. Okay. Anything else on the news? Sewing. I thought it was sewing machines. It's funny how with one letter you can change the profile of a company from really high tech to really low tech. Sewing machines, sewing machines, because they're a very high tech company here. They've announced the 16th Automotive Program Award, and if you're into tech, it's worth looking at this company. They help drivers, basically monitoring drivers and all that stuff, and it's almost a link between where we are now and fully automotive, and in fact, to be part of it, I suppose. But this contract with an OEM is worth a total value of 15 million. Total number of cars on the road with steam machines technology installed has increased by 134% over 12 months to 1.3 million units, and you can see they've got the growth figures there. I was looking at this earlier. I didn't go. I must be number blind, but I was finding this hard work to read out. Q2, that's his year-on-year growth. Oh, okay. Q3 to 77%. Q4 2022. Oh, so the good growth. That's good year-on-year. That's very good growth year-on-year, isn't it? Yeah, it is good. I did look at the chart. I think it was a bit of a messy chart. This or. Yeah, it's trying, isn't it? Look at that. The only thing is trying to get that 200-day moving average. It's trying to get above it, but not quite doing it. I would say a break of 6 pence above the 6. If it breaks 6 pence, and that's a break of the 200-day moving average, I'm going to say let's put an alert on there. 6p is resistance break. And little question marks is always worth saying. I don't know yet. Could be. But look at that. You can see there previous support, previous resistance. So 6 pence. Maybe it's off the races with automated technology. Okay. Tern. So you and Jack Oil, I was saying, up 9%. Production resumed at Wrestle Pedal. There we are. So since production resumed, flow rates in excess of 950 barrels of oil per day have been recorded. The one is now on continuous 24-hour production and is still cleaning up. Still cleaning up, eh? Export and sale of oil is recommenced. Once stabilized production is achieved, further announcement will be made. I know Brent is rolling over a bit, isn't it, at the moment? So, I know oil and gas players or oil players having a hard time. I said, look at that. In fact, let's look at Brent. Commodities. Commodities are taking a bit of a hit. Look at that. WTI, Brent, they are the biggest falls. 2% today. $80 a barrel now. Anything that's rising a little bit is wheat. Let's you into wheat? Yeah, I'll go. It's now broken the 200-day moving average. It broke it here on the up, touched it on August, rallied nicely when the Saudis and the Russians decided to cut. But now look at that, broke the 200-day moving average. That's essentially, you can see where it's done that before. Then it's trying to rally, but it's gone down. So that would suggest, like I said, as always, bull bear line, it may go down further. So again, if you're leveraged to a company that produces oil and gas, or oil pretty much, then that's an issue. In fact, the gas, there was rumors. In fact, when I see that, I heard that something that LNG is going to be some overproduction, a glut of it. I saw that on CNBC, I think. So you see it sort of rallied higher there, higher low, but yeah, the fundamentals are not looking good in order for that rally. So if you're leveraged to companies that are doing that, of course, they're going to take the brunt of that. What else is there? Tern is down today because they're not investing in this company. I like this. I mean, this has gone down here, right? 10%. But they've been disciplined in the investment approach. And they say that they were going to invest. So Tern shares, so the first tranche, they invested 100 grand. Tern share in Connectio reduced to 20% before any dilution. The shareholding is shy of $1 million. But they announced that it had committed to 280,000, but they say they've not decided to invest the second tranche, as announced today. Should Tern not fulfill its commitment to invest? Why is this? What is this? They did say it wasn't performing. It was oh yeah, it's odd they're saying this. However, given the business performance of Connectio, and in particular Connectio's monthly recurring revenue growth not having met Tern expectations, Tern has decided not to invest. So essentially they're saying one of their investee companies is underperforming, so they're not going to invest. There's been a bit of a fallout here. Because it's very unusual that they would state that. It's quite honest, quite transparent, saying the company we invested is not performing and deciding not to invest. So they provide an industrial IoT software as a service, Internet of Things, platform to original equipment manufacturers and aftermarket customers, as well as connected product market. Enables remote asset monitoring and management to drive productivity improvements. Okay, so that's unusual. You get that. The company being that honest about not investing in a company that normally they big them up and they, it's going really well. Yeah, Tern share price. Tern is one of these companies, gets a lot of hype around it because there's these spikes. And you see people ramping it on Twitter, and then it falls back down. It's an investment company, of course. Anything else? Or else, Oxford Biodynamics, a little bit of news there. They strengthen the commercial leadership with, who is it? Look at this. This is Dr. Stephen Arrivo. Dr. Arrivo brings, when's he arriving? Mr. Arrivo. Hey, he's Arrivo. 20 years of science and industry experience, along with an established track record in business and corporate development. There we are. He will be to implement effective marketing and sales strategies for newly launched EpiSwitch. And that's a prostate cancer test. Specific focus will grow sales in the US, where he has considerable experience of launching products. I like it they say that, as if a company's going to say, he's had no experience, but he's a good chatter, and he's got a good personality, and we feel he could do quite well. Yeah, it all got considerable experience. Anything else here? MRIT interim results, 17% up, 31% up. Interim results seem okay, accelerating growth, 17 million market cap. So 9 million, say 10, 20 million for the year, maybe. So, one-time sales, so not expensive. EBITDA up 67%, so back to profitability. Net cash generated 700 grand. The only issue is they've got a net debt, 2.5 million, with total available debt facilities of 4 million. So, not a bad performance in this market. I don't really know much about the MRIT, but MRIT. Not a big fan of the name. MRIT. Sounds like a boy in school. Oh, MRIT, come here. Look at that. That is very bitty chart. The reason why you can't see anything there is because the volume is very low. Look at look at that. She's talking about average volume is less than. I mean, sometimes you think, well, why companies listen? Average volume here is 2,000 or 3,000, and this is before the rise. So it's like 1,500 quid a day. So be careful about liquidity in companies like that. If you are, if you put in like more than 1,500 quid in, you are doing more than the average daily volume. So you may have problems getting in and getting out. That's the only issue there. I mean, look at that, 30,000 a day. But when you get companies like that illiquid, is an issue getting a position and getting out and getting in and getting out. Shaking all about. What else is there? Anything else? Falling? No. Come on, silver bullet. What's wrong? Do you research on it, people? Just do some research on it? I've done a video on that, by the way. Just search it up on YouTube. No investment advice. Do your own research, okay, and see what you think. I shouldn't do that. They've announced some. They've got this money capital consideration. Yeah, that was good. They were on the edge there, weren't they? Really were worrying about going through, but they've raised this money now. So that's MGC Pharmaceuticals. Anything else there? Overrunning a little bit here. So let's any comments. They liked the boom bar on the shoe, and raved about it. On the okay, Ian, I think you misspelled it. On the shoe. Don't know about the Guardian article. You would never see me reading that rag. Okay, you'd never see me reading that rag, even if it's covering a company you talk about. Is there a website which shows performance for last month, 3 months, year to date, etc. Trading view, just performance? Yeah, you can. I mean, on Trading View, you can look at screeners. You can do screen. In fact, most companies do screeners. Stockopedia, Trading View. You can look at the last 6 months. I think even This Is Money on the investing side has a link to the best before. You can drop down menus. So Trading View, This Is Money. You can look at best performance in the last, I think, 3 months, 6 months, a year. Different sectors, like FTSE 100 or AIM, all that stuff. Nashid says XPF does not seem to be reacting to this article. No, Stephen, OBD, opportunity of a lifetime. No, I like the product. I like the product. Listen, I've got a lot of experience with commercial execution failure on companies with very good technology. So and there we are. Like I said, here we are. Yeah, Trading View. Trading View, click top right, it says there, and you can see that. So that's pretty much it. I think there was something else quickly. Housing markets back. Oh, yeah, this is one thing that gets my goat. So a think tank urges Jeremy Hunt to invest in the economy. Yes, not cut taxes. Why are they to cut taxes, right? It's only trying to win votes. Too late. You've lost the vote. Probably. I'm not quite sure on that. There's lots of. I mean, if you really care, don't do it for for a vote winner, for popularity. Do it for the country and for the people. Rather than cut taxes, invest in the country. It's long-term investment. On current trends, the bottom 50% of earners in the country will not see their inflation-adjusted incomes return to pre-COVID levels until the end of 2026. The National Institute of Economic and Social Research said Wednesday. They said the best way to speed up a weak economy would be to increase public investments to 3% of gross domestic product every year and offer incentives for companies to invest more too. Yes, absolutely. If you give tax incentives to invest in British businesses, you'll find we'll have some amazing breakthrough technologies. Britain is full of entrepreneurs and clever people. DeepMind, for example. Is it DeepMind Google acquired? The AI, that's from Britain, ARM Technologies, all that. There's loads of great tech companies in this country. Life sciences, excellent. But we need more investment. It's all we need. All you need to do is invest in the right people. Anyway, British public investment is set to be about 3% of GDP this year, but will fall roughly to 2% in coming years, a difference of around £30 billion annually. I saw recently they're investing like $1 billion or something in AI or whatever. What? Put some real money in there, for heaven's sake. Certainly, if the government has the fiscal space to do it, that is what they should be doing. We do not want to see pre-election tax giveaway for a couple of votes. No, it's very short-termism. Think long-term. Invest in the people of this country. Invest in the technologies, and then you'll be a standout, winner, long-term for everyone. Don't think about your career or politics. Think about the country and its people. That way, you'll get votes. Actually, put the people first in this country rather than yourself. You will get votes. Full stop. It's a a virtuous circle. Anyway, sorry about that, Rand. I feel strongly about that. I just think politicians. Is it any surprise politicians play politics? It's their job, but it's annoying, isn't it? Do the right thing. Just do the right thing. Don't do the thing that you want to do because it makes you more popular. Thank you very much for watching, everyone. Apologise for that rant. By all means, if you like any of the content, give me a thumbs up on this and give us a thumbs up, I should say. Share it with your mother, your father, your brother, your sister, your nan, your granddad, your auntie, your uncles, your dogs. Share that and hit that subscribe button, and that shows we're going in the right direction. And of course, don't forget, download the Vox Market app. It's free of charge, but priceless, I tell you. Thank you very much. Have a nice day. Speak tomorrow.